All right, we're talking with Richard. Richard, you're with Allworth's Money Matters.
Hello.
Hey, Richard.
How you guys doing?
We are great.
I listen to your show all the time, and I appreciate your advice. So, I am a small business owner, really small. It's just me, and I've been doing it since 2018. I worked 23 years for a large semiconductor company, and then got laid off. And I've been doing this on the side, like moonlighting, for a long time. And I decided to go into business for myself.
Oh, good for you.
I do not. I'm not an Inc. I'm not a LLC or anything like that. I'm just a sole proprietor. I do my own taxes, and so it seems like I pay a lot in taxes. So my general question for you is: I don't make quarterly payments.
Why?
And I just don't.
When do you pay? Did you pay a penalty every
sorry?
year? When do you pay?
Yeah, I do. I do pay a penalty. So I looked it up. My last penalty it said $1,900 I paid in penalty.
What was your income?
So last year it was 226.5K.
Oh, this isn't a little business.
Yeah. This is a real. This is.
I was expecting
Okay.
like
I was
some
like-
eBay sales thing.
Yeah,
Yeah,
you're selling
18,000 last year or something.
Selling Legos on eBay. So $225,000 a year. And have you set up like a self-employment?
And do you have much expenses on that, or are you a consultant of sorts? Is it your expertise you're selling?
My expertise. I provide a service, so
Got it.
there's
Okay.
very little overhead. I work out of my own.
Yeah, I don't understand why you're not paying quarterly taxes.
Okay.
I mean, they're kind of a pain, and they don't even fall in the same months because it's January 15th, April 15th, June 15th, September 15th. So there's not even is that right?
July 15th.
I guess I feel like
July 15th.
I guess I feel like I'll just keep the money, make the interest on it or whatever, and then just pay the penalty.
October 15th? I might have been the number. My month's way off. Forget about it. See, I don't even remember the months. But
So no,
I pay
I would file quarterlies. I would file quarterly. And have you set up a self-employment retirement plan? Like a Unikay?
No, I just when I got laid off, all my money got rolled over into I have two IRAs, a traditional IRA and a Roth IRA.
how much do you have in those?
So my traditional, I have just over $1 million, and then in my Roth, I have 27,000, and my wife has about, because she used to work too, she has about 150K in her IRA.
How much is your wife's income?
She doesn't no longer work. She stays at home.
How old are you?
I am 58 years old. Be 59 in July.
And is your home paid?
My home's paid for. My wife's retired as well.
How long do you think you're going to do this?
So I can do this into retirement age because it's not that physical. So I can do it. And if I hired somebody, I could even do it even longer.
And do you have much money in savings?
So we generally put money in savings, but we generally get wiped out around tax time.
Okay. Okay. Another reason you should.
So this is one of the reasons why I'm asked.
Do you expect a pension in retirement?
I don't expect a pension. No.
You need to save more.
Okay.
Yeah, you need to save more. And one of the ways that you could do that is actually just set up a self-employment 401k. Very, very easy. You do it with one. It looks just like an IRA.
And really, back to Pat's point. I mean, part of you is like, I can do this indefinitely, which you might be able to, should your health hold up, right? But I've got a really good friend of mine. His wife had a nasty stroke 17 years ago. And like his world changed. And so like the whole, I mean, he had to retire early to take care of his wife. And like those things happen, right?
Yeah.
I mean, and maybe it won't happen, but we need to plan for, like, we're all going to get older and eventually we're going to get sick. Like,
so if you were sitting in my office, I would say, okay, look, we need to do a couple things. One is that we're going to pick a clear retirement date. It's not going to be an indefinite, and we're going to actually aim at that retirement date. So you said you're 58, correct?
Yes.
So I'd say, okay, let's pick a retirement date of 65 or 67 or whatever. And we would actually aim your finances at that date, right?
Okay.
Which would be a realistic date. obviously life happens, it would change. And then I would actually build the financial plan backwards from that date, including Social Security, your IRAs, your Roth IRAs, and you most certainly need to save more.
Well,
Quarterly taxes was the easiest thing. You got to file
that's
quarterly.
$1,900 for slight inconvenience. I mean, that's,
Right.
I don't know about you, but $500 a quarter just for taking the time to write the check. It's kind of worth
You're
it.
going to
Right?
do estimates, right? They're estimated taxes, so you're going to take last year's income.
Yeah, and the
just
penalties are
divide-
going to go up anyway because the interest rates are higher than they were year previous.
So that's a no-brainer.
But the idea of a solo K or uni K, you can funnel about $70,000 a year into that and get
Easy.
and deduct it, so you don't have to pay.
It's going to lower your tax liability. And so you'd go and do a pro forma for 2025, pay quarterly taxes, start the Unikay, and then base your estimated payments on this pro forma, which is after the 401k contributions. Obviously, self-employment tax sits in there as well. But then that's how you would determine your quarterly taxes. You pay quarterly, and then you start saving more on a monthly basis. You're
I'm
not
not
saving
familiar-
anything for retirement, by the way.
Right. I'm not familiar with the terms you just mentioned, pro forma and
Okay.
Unikay.
So a pro forma would mean I'm just going to run a simulated tax projection of income for the year 2024, 2025, right? So, and a Unikay is nothing but
Solo K or uni K, they're called both those things.
it's nothing but a self-employed 401k
For people with no employees.
with no employees.
And they cost almost nothing to set up.
They look just like IRAs, but the limits are higher.
It's a self-employed. What was that?
It's like you had a 401k at your own employer, your previous employer. It looks just like that. You have an investment selection. You actually, rather than it come out of your paycheck, you just write checks into it.
Yeah, if you Google Unikay or Solo K, you'll find some more areas where you can read about that.
Oh, okay, great.
Yeah, but you
Yeah, you can
I
give
did
it.
not
You
know.
can contribute. I was just looking right here, $70,000.
yeah. So it might make sense for you to sit down with a financial advisor, pick a target date of retirement, and then work backwards as to how much you need to save to get there. And it would include your Social Security benefits for both you and your spouse. Is your house paid for?
Yeah.
Yes, my house
Okay.
is paid for.
Well, that's good.
Yeah.
But you've got to
And
pick
are you
a real retirement date.
you mentioned something about having an employee? Are you considering having an employee?
Yeah, I've thrown it around.
I mean, it does
Right.
change your work quite a bit, right?
Yeah.
But I mean, but if you want to,
He doesn't want an employee.
Yeah, I
Did you hear the enthusiasm in his
that's what I was
voice?
just asking him.
Yeah,
But the reality is, you have no business to sell at this point. So when you start thinking about business, that might make sense. It might be a time to bring somebody in.
It's still a consulting business.
Yeah, I know.
right.
Yeah, they're
I
buying
don't
your
get- I don't-
expertise.
I don't get totally wiped out, when I pay taxes. I mean, we'll have like maybe $10,000 left.
How much do you have in
know.
your How much do you have in your bank now?
I think we have about $70,000 right now.
Okay, you make $225,000 a year. You've got $7,000 in the bank, and a bit over $1 million saved for retirement. You're
1.2 million. So you got about 5 or 6 times.
yeah, you're far away from
not dissimilar to the previous call, which is just a different.
just different numbers.
Okay.
You just need to. And it would,
I totally agree with Pat. If you really run the numbers, like you pick some date in the future that so that you could retire, maintain your standard of living. Maybe you won't, but to be in a point where work is a total option and not an obligation.
Right.
And when you're at that point, it's quite liberating because then it's like I don't know if I want to work for this client or not work for this client.
Right. I'm
Yeah.
not at that point. Yeah.
Yes.
Okay.
and what
Okay,
did you
good
what did
advice.
you make at your previous employer?
When I got laid off, it was right over $90,000 a year.
And how long ago was that?
18.
2018.
Well, you think you've done well for yourself.
You've done great. What a great business.
I know. You said small business. Great.
What a great you should be very proud, right? And you built
And did your spouse work outside the home prior to that?
Yeah, she worked for a major bank.
And your kid, when was your last child off the payroll?
when did they
Oh,
become
we don't have no children.
Oh,
Okay.
Just my wife and I.
All right. Yeah, you need to. I would sit down with an advisor or do it yourself and run pro formas, figure out the
you
tax.
You have plenty of money saved to replace $90,000 your but about enough saved for that. You don't have enough saved to replace a $200,000 a year income.
Right. Okay.
All right.
And my guess is you haven't been spending all. You probably paid off your home over the last several years, and maybe did remodel on the house and done some other stuff like that. That would be my guess.
Yeah. No, I have. It was 3 years ago when I paid off the house, and then we've done a few small renovation projects.
There we go.
Yeah. Well, now's the time to let's save some of these dollars.
Yeah, kick it into gear.
Pay our quarterly taxes and move forward that way.
Okay.
All right, appreciate the call.
I wrote everything down. I appreciate you guys' information and expertise. Thank you very much.
Thank you, Richard.